Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on gold market. So you can see market briefly touched the level that we had talked about, not quite reached 1820, but it's touched daily overbought area around 1818. So it shows the minor pullback. Reaction here was not as strong as on the euro currency and Great British pound, but still market also is coming to the point where it will be decisive for the market, as we're considering taking the short position here and think that it should happen somewhere around. So currently the major question is whether the market will show another swing up before reversal, or this will not happen, the market proceed lower right from here. And then to make the decision, we need to find some solution that will let us to possess ourselves on the trade and to not take too significant risk on this trade. So on the daily chart, actually some predefined conditions that we discussed here mostly is done, as market has completed upper breakout of the flag, reached the overbought, hit the levels that stands right here, and almost has completed the target of this fake downside breakout of the flag pattern. So currently here on the daily chart we do not see something really new. On the 4-hour time frame chart we have important thing. So first of all, guys, here market stands right now in a bread and butter buy trade. So if you plot the moving average here, you'll see that's retracing right down to the 30% support and shows the 618 pullback. That's bread and butter target. So here was the 4-hour time frame bread and butter trade. Currently, market is stuck between the two levels. First of all, you can see the downside pullback has happened to the broken confidence. I initially have keeps this levels with our former confidence to show you that market retests usually previously broken confidence. Also, as you can see, the previous top actually and rather significant support areas market dropped to. At the same time, on the way up, market bounced down from the resistance that we have specified. So if you have taken the short position here with the stops above the zero, you probably could keep it and see what will happen next. Maybe you could even move stops to the break-even. Now, for those of you who would like to take the short position but do not have it, here we need to take into consideration one important moment. Although the bounce down looks great, and indeed market could start downward action right from here, but at the same time, if we take a look at the hourly chart, we still have the XOP. So we discussed yesterday is 1820, and this level hasn't been reached yet. So market barely has, just slightly hasn't reached the target. I prefer to see it being touched. It's would be perfect solution, but if we would like to possess ourselves before this will happen, because we can't just sit on the hands and wait when this market will complete the XOP, because this might not happen. We need to protect ourselves on the case if this will happen and if market will reach this level. So it means that anyway, for any bearish positions that you would like to take, your stop has to be above this area. Because if market, by some reasons, will continue upward action, hits the XOP, it will not be the destruction of the bearish context. And that's why you would like to stay in this trade. You do not want to be washed out by just the taking out of the stop. If you place stop somewhere this area. So you need to foresee this situation and place stop in advance of it. So it has to be above this area. So in this case, you could see that it also will be somewhere above the confidence and above the 1618 extension of our butterfly that we discussed recently. So somewhere 1825, it should be more or less acceptable level for stop placement. For position taken, you have a few options. So first of all, you could wait for XOP, as I said. Maybe it will happen. In this case, your entry will be perfect, because, for example, here we're considering this some kind of the Gartner's triple to sell pattern, but potentially it also might be the butterfly, right? So it could be the left wing of the butterfly. Market will show some pullback start upward action. It could be right wing of the butterfly. And the target of this butterfly in this case will be to 1821.75. It's 127 extension of the XA swing. So that's one of the patterns that might be formed that gold could use to complete the XOP, hit the confidence, hit the daily overbought, and prepare for reversal. Besides, butterfly becomes very often the half the part of the head and shoulders pattern, and later some greater pattern for reversal might be formed. This is a scenario that we could get. Alternatively, I'm not excluding the chance that market could start downward action right from here, because very often on the gold market reversal happens by the triple two sell patterns. This is some feature of the gold market, and it very often starts to reversal not from some larger pattern, some double top of the hand shoulders, but very often it starts reversal from just the triple two sell. So, and here you can see on the hourly chart we have this kind of the triple two sell. It's around 1805. It's agreement resistance XOP. It's minor ABCD pattern and the 618 level. This is, by the way, the target of the bread and butter. So, that being said, as a bottom line, what we could do? As I said, first of all, you could wait just for XOP and do nothing currently. Second, you could try to take the position right here, or some parts of this position, not necessarily the total, the whole volume of the trade usually, with the stops above the XOP, and then see what will happen. That will be some compromise, because if market starts downward action right from here, you at least will have some part of your trading lot. If market will climb higher, you add more in the XOP, and your average will be somewhere around the 1815 area. So also will be acceptable. And the stops again about this area. So that's potentially what I think we could keep an eye on the gold market, because it seems that market's coming to the point where the market should tell us something about the reversal. Because in general on the daily chart, market is coming to an area where by our trading plan, some signs should be formed and some clarity should come about whether the downward action will start or not.